Hello friends, welcome. Friends, this is the part 2 of the video series which I just recorded a couple of hours back, wherein I took you through the insights of what the GDP numbers tell using my Tableau dashboard. So if you go through the part 1 of the video, you will be able to understand and you will be able to get the background of this video that I'm going to record right now. I'm recording right now. Now, you don't really need to go through the part 1 because this is also going to be a standalone video, because what I did was I gave you the insights as to what the numbers tell. Now, in this video, what I'm planning to do is that I'm going to do a forecasting. So I'm going to bring before you what the numbers will look like in future and how much you have to grow in order to meet our targets like $5 trillion economy, $10 trillion economy, etc. And what is a reasonable projection to look for. That's the whole purpose. So friends, I'm not going to go through these charts, the Tableau dashboard. As I told you that I have two tools which I have created. One is the Tableau tool, which I took you through the part 1 of this video. The second is the Streamlit application. And the Streamlit application is here. I'm going to take you through the Streamlit application, what this application is all about. But before I take you through this application, I will like to give you a little bit of an overview as to what this application is and how this has been written. Now, if you go to my GitHub webpage, you can clone this and you can run this because this is the program, which is the program which you see here, the Python program. On the left hand side of your screen, this is what I wrote. And you can get the code if you want to learn how I have written this program. But this is not a Python video, therefore I am not going to spend any time. I'm just briefly telling you how this web app has been written. And then I'm accessing this file, which is the file here, which I have converted into a much more user-friendly format, which can be easily read and processed into the Python code. Now let's go to the main program. Now this is the program which I'm talking about. Now if you look at this program, let me show you how you can access this program first. So here I go, and just a minute, I take it to desktop 3, and once it is here, I just take it out. Okay, hold on. This is a problem. What happened? I just want to show you how to start this program. Sometimes I myself get confused, what is going on. Anyway, I'll just show you how to start this program using just a minute. Yeah, here it is, right? So I'll just exit full screen. Oh, that was the problem. So what you have to do is that you have to use this link. This is a public link. So I'll send you this link in the description. I'll paste this link in the description, and you run this program, and this is how the program is going to run, right? This is a purely a web-based program. You don't require any capability, any kind of tool to be downloaded, and it is going to run directly on your web page. Now, how this program has been created, I told you. Now, there are various options that this program gives you. Let me explain to you, and before I go into the details. So, you can choose a dimension, GDP current, which is the nominal GDP constant, which is the reference price of FY12, then the GVA current and the GVA constant. So you have an option to choose, right? So you can choose any of the options. The charts are going to get displayed accordingly. Then you have an option to choose the currency. You can choose a currency of rupee or US dollar. Right? So if you choose US dollar, the numbers are going to be displayed US dollar. If you choose rupee, the numbers are going to change to rupee, right? In lakh crores, and US dollar is million. Then you can have a time series of quarter or financial year. Depending upon what time series you choose, the graphs are going to change accordingly. Then you have an option to choose absolute percentage. Percentage means what is the component percentage, the contribution of that particular dimension to the overall GDP number. That's a percentage. And then we have growth. So depending upon what is that you want to investigate, you can choose from here. And then the most important part here, you have to choose a plot type. Whether you want to choose a plot type as heat map or scatter. Now, the heat map is almost similar to what I showed you here. So I don't want to, kind of gives you a similar kind of story. So I don't want to give you I don't want to go through the heat map. So what I am planning to do here is that I'm going to take you through the scatter plot, which is extremely important. This is where you will be able to see all kinds of projections, and you will be able to run through and play with the numbers. Now, there is one more thing which we need to know before I go into the forecast part of this discussion, is that I have a capability to zoom in and zoom out. So if I am in a quarters time scale and I can basically pull this, and then if I pull this, what will happen is that the graphs are going to get zoomed out, means you will be able to see a larger time period, right? And then I can change it and I can zoom it to a smaller time period to basically zoom in. So that capability you have, and you can do it yourself, right? So this is a web-based tool I'm going to share. You can run it and play with this number, okay? So let's look at the first part of the discussion. The first part of the discussion, I just want to tell you how the numbers look, what kind of flavor that you get by looking at the GDP numbers. Let's look at the GDP constant number in rupee, and you will be able to see how the numbers change over a period of time. Now that is very difficult to see in a Tableau dashboard, because the Tableau dashboard, you have the capability to look at time scales of a limited duration because of the limitation of the dashboard. Here what I've done, because I've plotted a scatter plot, you can look at the whole period. And not only you can look at the whole period starting from the beginning itself, which is what is that? June 2011 till the last period, which is the March 2024. So whole thing you can see at a glance, and then not only one, all the dimensions together you can see, which gives you a very good picture as to what is going on. Just give me a minute. Just let me just pause this video. I just want to make sure that I am facing a little bit of disturbance. I am back. The problem was that my computer was slowing down because of the direct sunlight which was falling on my MacBook, which was heating up. Anyway, there are so many applications running in parallel, and then top of it, if your MacBook is directly under sunlight, you will be facing difficulties because everything will go to slow down. Okay. So, let me just come back to the presentation. So you can see here, it gives you a flavor as to how these dimensions are looking. So this is the GDP dimension, and then there are various other dimensions like import, then we have exports, then the capital formation, the gross fixed capital formation, discrepancy, the the gross fixed capital formation is here. This is basically the spend, the government's, which is here, which I showed you here. Just a minute. Here, say, look, the computer has slowed down. Yeah, these are the government final consumption expenditure, gross fixed capital formation, private final consumption expenditure, export and import. Let me go back again. Right now, what do you notice here? You notice, I like to focus your attention with the manner which these dimension is fluctuating over a period of time from the beginning. Now you might have noticed is that in the beginning, in the start, the trend line that you see, the numbers were very close to the trend line. As you had, after the COVID, it's almost like an oscillation. The numbers are oscillating. See? It's very, very interesting. Can you see this? I'm looking at the GDP constant, the rupee. So you'll find that this is basically closely aligned and close to the trend line, and then it is like an oscillation which is happening. This is a very interesting thing to notice, because the number went down during the COVID, went up, went down, went up. So why our GDP should be fluctuating in this manner? Can anybody tell? If you have any insight, just put it in the description box. I do not have the answer, because once having gone down and come up, we should follow the similar trend what we saw in past. Why we have to go up, go down, go up and go down, right? Anchored with this trend line. That is one point to be noticed. The second point that you will note that the imports, initially imports were high, which was higher the trend line. Then it went down, then it went up, then after the COVID, the imports went down. Now the imports are consistently higher above the trend line. And this is after the PLI was announced. The PLI announcement happened. So you'll find that the imports basically went up. Similarly, you will find that the exports are demonstrating almost a mirror kind of image like the imports. It's almost similar. Can't you see? Here is the export and here the import. Why this has to be absolutely similar in nature? Why shouldn't it be a little different, This is what I don't understand, because if we are driving exports and we are doing it organically, fundamentally, then the import curve structure has to be fundamentally different from the export curve structure, because our export should not be going higher as the import goes higher, which is a very clear reflection from this chart, right? Can you see? Then you will find that the private sector consumption is also kind of anchored around the trend line, and then it kind of fluctuates as the GDP fluctuates. So it's also driving the GDP curve up and down. Means this is maybe a main anchor point to drive the GDP like this. But there are other anchor points also which were fluctuating. But like for example, the government fixed capital formation, fixed capital expenditure. This is following a similar trend. Only thing is that the amplitude has become higher, right, as we have progressed with time. It's quite distinct from what we saw in the private sector consumption expenditure, where the amplitude has really gone very high, but it is almost like not that significant from the point of view of fluctuation in the initial part of the series, on initial part of the curve, which is basically right before the COVID. And then we have the government fixed capital formation, almost similar in nature, not much insight which you can draw. So this is in essence that you get from the looking at the picture. Now what story it is telling is that definitely our GDP is growing. We've been able to recover from the losses that we have encountered in COVID. The second story that it tells is that the private sector fixed consumption expenditure is driving our GDP and following a similar trend as per the GDP growth curve is concerned. So maybe a main contributor to this. And the third important insight is that our exports, which are positively impacting the GDP growth, are not able to help with that level of intensity because the imports follow a mirror curve with the export and pulling down the advantages that we are getting out of our exports, right? Now let's do the forecast, which is the meat of this presentation. Now, in forecast, we will do two types of forecast. One we will do for the GDP constant, which we just saw, right? And we will do it in the rupee currency, and then we will do the GDP current, which we'll do at the dollar currency, because dollar is important, by the way. Dollar is important. Why? Because we are projecting all our forecast in future in dollar terms, like India becoming a $5 trillion economy, India becoming a $10 trillion economy, by so and so time we will become a $30 trillion economy. All these are basically projected in dollar terms. Now, I am not including the dollar rate projections here because I'm assuming that the past trends are going to carry forward in future. There is no point in extracting the rupee dollar rate out and putting that as a separate parameter in projection, because it makes no sense, because we already have so much data in the past and the trend lines can be tweaked, and I'm going to show you how to tweak the trend line, and then you will be able to replicate the past trend into the future. Means you are going to reproduce the past trend in the future, and you will be able to understand what kind of trend line that you need from now to the future from the point of view of to meet your projection. Means what kind of growth that you need in the future to meet your projection. So let's do this. Let's look at the GDP in the rupee term. Now in GDP in rupee term, we are doing forecast here. So how do you change your forecast? How many quarters? So you can add, let's say if I want to do 10 quarters in future, you put 10, or you can change this number here from here. So what will happen is that the curves are going to get automatically adjusted to show you the trend value. Now, if you are going to follow this trend here, if you see here, you will be on a quarter basis. Currently, what is the quarter value that this is basically 46.4, right? Lakh crore in the last quarter, which is the projection quarter. And before that, it is 43.7. Now, if I go with the trend line in the future, So it was around 46.6. We can't see a significant change, which is 47.17. If you extract the trend line and assume that this is going to follow the trend line, which I believe is maybe a little bit of a conservative projection, because the COVID was an unnatural event. So we need to compensate for that. So I'm going to show you what kind of compensation we need to do. And therefore, rather than spending time on the rupee growth, a rupee trend, let's focus on the dollar value, which is the most critical part of this presentation, because everybody interested in the dollar projection. So I'm going to do GDP current, and I'm going to do US dollars, and I'm going to do for both quarter as well as for year, right? So let's do this. Now let's see what is the value as far as quarter level is concerned. In March 2024, from a dollar value, we were doing $926.3 billion per quarter, right? Now, if I choose a time scale of financial year, let's look at these numbers, how these numbers change. You'll find that if you do a financial year number, then we are doing how much? $3.547 trillion, right? In the FY24. That's the number that we're talking about. Now, if you follow this trend in next 4-year time frame, which is FY28, the number will be $4 trillion, right? Now, would you say that we are going to have a $4 trillion economy in next 4 years? No. Let me explain to you why. The reason is that if you see that the required growth in the tooltip is 3.03%. Now, our GDP in the dollar term is not growing at 3.03%, right? We have already seen this. How much it is growing? We can very easily see the growth here. Let me just show you what the growth is. Now, if you look at the growth, you will find that our GDP is actually going in dollar term at roughly around between 6 to 7%. So we can't be growing at 3.30%, which is basically shown here. See? Here. Let me let this, because it takes a little bit of time to load. My computer is getting, really hard pressed because see this. Now, how did I calculate this 3.30 number? It's very simple, because I know the last number of the projection, which is $3.4 trillion. I know this number, 3.5, and very easily I can calculate the rate. It's a simple calculation. There is nothing like that, right? Everybody does this calculation. So I have put this in the tool itself. So you can basically show that 3.30. So in order to understand the realistic number, let's assume that we grow at 7%, okay? And how do I make the change? By grow 7%, I will be able to change the trend line bias. Now, currently, bear with me, I was thinking of doing a trend line bias for the individual dimensions separately. My code is not ready yet. I will make the changes. So once I change the trend line, all the biases will change. Let me explain what will happen, right? So let's say if I do a negative bias of certain percentage, this is percentage by the percentage of the reference value, which is right there. So you'll see the trend line is going up. Can you see this? Trend line is going up. Now, by changing these trend line, then you go here and see what kind of growth that you need. So once you put your mouse pointer here, you'll see 4.45%. You will be at around 5.06%. You will be at $4.3 trillion in next 4 years from now, right? Now, if I make it just instead of spending time in doing so, I'll just put 10. Now, if I put 10, then let's see what the growth number is, because I need to match this 5.09% to 7%, right? If I match this value to 7%, then only I will be able to, and let me just do one more thing. Rather than making it 4, let me do 2, right? 2-year forecast, and then I will do 15, minus 15, let's say minus 15, so as to move the line further up. Now, see, no, this has become very bad. So let me do 10%, 10% bias. Now 8.3, so maybe 9% bias. So if I do 9%, it's 7.74, right? Let me do 8% bias. And you will see that if I do 8% bias, now it is 7.14%. So if I grow at the rate of 7.14%, I will be a $4 trillion economy by end of 2026. That is FY 2026. It's very clear because now I have to grow like this rather than physically the trend line which was like this because of the COVID. It was pulled down. Actually, the trend line has to grow like this. It has to grow here. And I think we should be able to do it because we are growing at a rate of 7.7% anyway. We have to be a little bit more because it is slightly lower some years and slightly higher some years. If you grow at the rate of 7%, we will definitely reach $4 trillion in the next two years. Now, when do we reach $5 trillion? That's a big question that we have to understand. So let's change it to 5 here. And if I make it to 5 year, within 5 years, if you are growing at the rate of 5%, we are at $4.5 trillion, right? So we cannot grow at 5%, we are growing at 7%. So I do 10 bias. If I do a 10 bias, then this is pulling the line up. No, 5.37%. Let me do 15% bias on put the trend line up. 6.41%. Let me make it 18%. So if you see 18%, 7%. So now you see that by FY 2029, end of 29, which is from 5 years from now, India will become a $5 trillion economy. So whatever number, because 7% is a reasonable growth that you can assume, because we are growing at 7% anyway, right? In dollar terms. Now, if you grow at 7% in dollar terms, you will become a $5 trillion economy by FY 29. It's clear from this graph. Now, when will become a $10 trillion economy? Let's answer that question. So I'll put, let's say 10 here and see the future year of projection 10. Now I'm growing at 4.89%. So let me increase this number by, let's say, 5%. No, let me make it at least 6%, because as you grow higher in number of projection, you can't assume the same level of growth, because you can't sustain the same level of growth and for a higher period. So I'm safely assuming that, let me say that we will be able to grow at 6%, right? Because as you move forward, you can't maintain that growth. 6% means, let's see, let me make it 30 and no, let me make it 32. Yeah. So you will become in next, from 10 years from now, right? We will be basically a $6.36 trillion economy if you are growing at 6%, right? Let's make it 6.5%. So let me make it 6.5%. So if I make it 6.5%, then we will be growing at, then will be roughly around, $7 trillion economy, right, in next 10 years. Now, when will be by 2047, which is basically how many years from now? 20 years? No, maybe 24. Yeah. So, if we are growing, so by 2047, we have to grow at what rate in order to reach around $15 trillion economy? Let's look at this. Let's see that. Now, make it 80. I'm just moving the bias of the trend line higher so as to basically make the calculation. So, again, maybe make it 100. Make it 120. So if you are growing at 5.39%, or let me just make it 5.5%, because that is a reasonable growth to assume. 5.5. We will become a $13 trillion economy by 2048, by end of 2048, right? So it is. So now, what is the purpose of all this exercise, which I am doing before you? I am doing this exercise before you because we need to be conscious and realistic about the numbers. What is important for us to look at? What is important for us to look at? The growth rate. And this growth rate of GDP depends on all these dimensions that we are talking about: export, import, gross capital formation, the government expenditure, the private expenditure. all have to contribute. And the most important thing that has to contribute is the rupee dollar rate. If the rupee dollar rate does not contribute and it continuously rupee gets devalued against dollar, our GDP growth rate in dollar terms is going to suffer. And you can see it. I am going to post this tool before you, and you can see these very clearly. So I think, friends, we already have 25 minutes past in this video, and that was the essence of doing this video, to give you the projection, because that's the most important thing to understand what the projections are. There are many things which you can do in this tool. I'm going to put this in the description, and you can play with this tool. Maybe it may not be so obvious because some of the things I have done it in a very hurried manner. I'm going to put certain notes in this tool so that people who are not aware how this tool works, they will read the notes and they will be able to understand how to use this tool going forward. And maybe I'll do some more modification to make it more user friendly. Thank you very much, friends, for your time. I'll come back to you next time with a new video. Thank you.